The famous question, is trading a scam? So no, trading is not a scam. Trading refers to the act of buying and selling financial assets, which can be stocks, bonds, commodities, and currency, and it can be in various forms, including the traditional trading on exchanges, online trading with platforms, and through other type of brokers. However, there are scammers in the trading world, just as there are scams in any other industry. For example, there are some fraudulent trading schemes that may promise you high returns with a really little effort or expertise. Or also, they will encourage you risky investment in order to take advantage from you. Also, even use fake or misleading information to manipulate the market. So, if I can give you an advice, it's essential to do your research and be careful before investing your money in any trading opportunities. Always remember that there are risks involved with any form of investment, and it's important to understand those risks before committing your capital. This is what I like to say to everyone. Oh, he's trading a scam, I got scammed. No, there are bad people in every type of businesses. People will try to take your money no matter what. What I want to share with you are two main things about this. The first one is, if someone is telling you, yo, there are really small risks to make a really high return on investment, to make a really high ROI. First, what's the ROI? Because you need to compare what's going on the market right now and what's going on with what they offer to you. Most hedge funds, they offer you 8 to 12% per year. If you take on average, it's 10%. A professional hedge fund gonna give you 10%. But this guy that you don't know, who's doing YouTube video, is telling you he's gonna make you 40, 50, 60% a month, a week, a day. No, this is not possible, guys. Like, be realistic. It's like me telling you, yo, go play the lottery, you're gonna win today. What's the probability you're gonna win? It's almost zero. Here it's exactly the same thing. You will most likely lose all of your money. Then the second thing that I wanna tell you guys is, if you are able to do 10% return on investment every single month for the next 10 years with 10,000 pounds, you will have over 100 million in your bank account. So obviously, this is not possible, or everyone will be making 10% return every single month. So yeah, compare what's the offer and what's in the real world. Is it matching? No. Like, if someone comes, oh, we're making 18% a month. You can be, okay, some hedge fund do 12%. Okay, maybe they have a better strategy. Let's give it a try. But again, if you do that, you don't put all your eggs into the same bag. You diversify, some eggs here, some eggs here, some eggs here. I'm sorry, but this is a stupid move. This is BS. You shouldn't be doing that. That's the first thing. Then, second thing, talking about risk. There are risks in any type of businesses. If someone telling you, yo, there are no risks, he's lying to you. Money come with risk, and this is a key sentence that I learned from my young age. If there are no risks, no rewards. For example, let's talk about a 9-to-5 job. When you have a 9-to-5 job, what is the probability that you get fired? It's very low, because it's gonna cost so much to the company. It's a long process. Even if the company go bankrupt, they need to pay you, they need to respect everything. So yeah, for you being into a 9-to-5 job, there are no risks. At the opposite, if you're the owner of the business, you need to pay everything, everyone, and then you pay yourself. So you are taking the risk of paying yourself last. That's why, like, when you own your own company, you are taking more risk and you can make more money. But that's the thing. For example, let's say you're a young kid, you want to open like a shoes business. There are risks. Maybe you won't have clients. Maybe the value of the shoes gonna go down. Maybe you're gonna have a competition. You don't know really what's going on. There is always the notion of risk, and with the notion of risk, money comes. Now, another question: is the government investing? Yes, many governments invest their money in the stock market. Government invest their money in the stock market for a variety of reasons. First, generating revenue. 2, diversifying their investment portfolios. And 3, supporting the economy. For example, some governments invest a portion of their foreign currency reserve in stock in order to earn higher returns on their investments. On the other side, others invest in stocks to support their pension funds, which can provide retirement benefits for their citizens. Some governments are also investing in the stock market to promote economic growth by investing in companies and industries that are expected to create jobs and contribute to the country's overall economic development. It's really important to note that government invests in the stock market are typically managed by a professional with extensive experience in finance and investing, and the investment decisions are made with careful consideration and analysis of the risk and potential returns involved. So this is to answer to those people that, yo, is investing a scam? No, Do you see that even your own government is investing their money? Second thing, do you know that all the biggest companies in the world are listed on the stock market? Look at even the local company here, Tesco, it's listed. Microsoft, Apple, Volkswagen, like they're all listed on the stock market. So no, investing is not a scam. Something even better. Do you know that you are investing your own money without even knowing? Yes, because you know every month your money goes in pension funds. Pension funds are typically among the largest institutional investor in the world, and they invest in a variety of assets including stocks, bonds, real estate, and other investments such as private equity, hedge funds. So yes mate, you are investing because pension funds are designed to provide retirement benefit to employees, and they typically have a long-term investment horizon which allows them to invest in a diversified portfolio of assets and earn returns over time. Pension funds are often managed by professional investment managers or financial advisor who are responsible for making investment decisions on behalf of the fund beneficiaries. And who are those beneficiaries? It's you who's watching this. So even if you thought that trading is a scam, now you know that you are investing your money without knowing. To get back to those funds managers, they have a variety of investment strategies and tools to manage the funds, and they're trying to maximize return while also minimizing the risk and ensuring that the fund has sufficient assets to meet the obligation to retires. Why are fund pension investing? You might be, no, I don't want my money to be invested. Okay, let me explain to you. It's pretty simple. Your money, if it sits in your bank account, every year is losing its value. Every year, your money worth less and less and less and less and less till one day it might worth zero. How is it possible? It's called the inflation. And there is one simple way to fight the inflation. It's to invest. What is the main thing to protect yourself from the inflation? Is investing. And the two things that mainly follow the inflation is stock market and the real estate. And this is why pension funds are investing your money for you to still be able to live a normal life. People used to live with £800 a month. Now you need what? 1,400, 1,600 pounds to live the minimum basic life. So imagine if they would just let the 800. Now they wouldn't be able to live anymore. That's why fund pension invests their money. Like it or not, this is how the world works. I was talking about you, but I'm not done. Another example of you investing. Many people are investing without even realizing. We talked about pension fund, but let's talk about something else, which is if you have a retirement account such as the 401k or an individual retirement account IRA, you are likely investing in stocks, bonds, and other assets through the funds in your account. If you are a saving account at the bank is using your own deposit to make loan and investment, which means that you are directly investing in those assets. In addition, many people invest in the stock market through mutual fund, exchange traded funds, ETF, and other vehicles, either directly or through their retirement accounts. So yeah, my felly fella, you are investing without even knowing. So even if you are not actively managing a portfolio of investment, many people are investing indirectly through their savings and the retirement accounts, which means that they are all still exposed to the risk and rewards of the global financial market. Why do you think you let your money slip at the bank and you get 1% return every year? Because they are using your money. Now, as you can see, I'm talking about investing. But why should we invest? The first thing is pretty simple, is build wealth. Investing allows you to potentially earn a higher return on your money than you would earn through saving alone. And this is a notion that I really love, because let your money slip at the bank is kind of stupid because you're losing money. And at the end, you get back to the same road where you need to exchange time for money. 1 hour for 10 pounds, 10 hours for 100 pounds. But what if you could make your money work for you, and when you sleep, your money is working for you and bringing you interest? By investing, you can grow your money over time and potentially build wealth for your future. The second thing, we already talked about it, is beating inflation. Inflation erodes the purchasing power of money over time, which means that the same amount of money will buy you less in the future. £1 today worth less than £1 tomorrow. So by investing, you can potentially earn a return that exceeds the rate of inflation, allowing you to maintain your purchasing power and keep up with rising prices, and make even more. The third thing is meeting long-term financial goals. Investing can help you to achieve long-term financial goals, such as saving for retirement, buying a home, or funding your children's education. The fourth thing, and probably the most important one, is diversification. Investing allows you to spread your money across a variety of assets, which can help reduce the risk of loss if any of these assets performs poorly. And this is what I'm telling you. Diversify. Don't put all your eggs into the same bag. The reason number 5 is to participate into the economy. By investing in businesses and other assets, you can participate into growth and development of the economy, potentially benefiting from the success of the company and industry in which you invest. It's important to know that investing involves risk and there are no guarantee of return. It's important to do your research and understand the risk of potential rewards of any investment before investing your own money. Also, about investing, I would always recommend people to invest money that is not mandatory for them, money that they don't need. If that money is needed to pay your bills, your house, your grocery shopping, you are not into a position where you can start investing. So don't invest. It's fine. You might be able to invest within the next 6 months. You will save every month and then you will be able, but please don't invest money that you need, because then your emotion will be stuck to you and you won't be able to handle them properly. I hope you liked this video. I hope I cleared out a lot of bad branding that we have around trading. If we just sum up, you can see that trading is not a scam. Governments are trading. The biggest company are listed into the stock market. You are investing things to your bank account, your saving account, your 401k bank account, your pension fund. And finally, investing can help you in a lot of ways. In case you like this video, feel free to hit the like button, but also to follow and also to subscribe to the YouTube channel.